Hi, Seth.
How you doing?
I'm doing very well.
That's good. That's good.
Would you mind telling us who you are and what your position is with Funder One and what you guys are up to today?
Well, basically, I'm the CEO of Funder One, and as far as where we are today, and we're doing great when it comes to the market because we are listed right now on Binance DAX. And as you know, it's one of the largest exchanges out there in the world. And we're doing great on that platform because right now we are trading at $227 last time I checked this morning. Okay, so we're doing great. So basically what we try to do right now is doing more marketing so people can come in and get into the platform so they can reap the benefit that we have on our platform.
Yeah, that's huge. I know we initially started U-Bets at $1.
Yes.
And over the last 2 or 3 months that we've been working, getting listed on Binance DEX, as you said, that's a huge price increase.
It is. It is.
And that's due to the market increasing.
Marketing.
And that's also due to us strategically aligning the business correctly.
Of course, of course.
So it's a very exciting time for us.
Very.
And now it's time to let everybody know what we're up to.
Yes,
so,
yes.
But before we get to everything fast forwarding today, maybe we should give everybody a little bit of history on what's happening, how we got here today. So why don't you give the people a little bit of background on the business?
Okay. Well, as you know, in 2008, Satoshi came with Bitcoin and blockchain. Now, in 2015, I was introduced to blockchain at that time because a friend of mine introduced me and said, hey, I think there's a great opportunity here in cryptocurrency. I said, cryptocurrency? So you're talking about money? He said, yeah, but in blockchain, but not the Federal Reserve funding or the fiat money. I said, how that works? And then he did explain that to me. And myself, being in the mortgage business for the last 30 years, I didn't understand it. So I didn't want to be part of it because he's talking about the cryptocurrency. And if houses is not involved, I don't want to do anything with it. So I told him no. I said, no, I don't want to be part of it. Because if we cannot do anything with housing or help people to get funding and all that, so we cannot do it. You say, well, right now they don't have that, but I'm going to let you speak with the developer, and you and the developer can come up with a plan or with something to see how you can make it fit that we can help the people with housing. And I went on and read the Satoshi's white paper.
Yes.
After I read the white paper, I found out all kind of good stuff in it that nobody mentioned in blockchain or in cryptocurrency. And I also found out there's at that time, there were over 2,000 cryptocurrencies out there. But none of them mention houses. And I also found out that Satoshi came with Bitcoin and blockchain after the housing meltdown, not after a financial meltdown. There's a big difference between the two. Why? Because Satoshi clearly stated on the white paper, right? He wanted to help people or people can see how the banks make their money. Because the meltdown that we had in 2007 and 8 was due to the banks pull the plugs on everybody, investors and everybody else. Now, the investors lost their money. The homeowners who purchased the houses lost their homes. And then you have all the bankers got bonuses at the end of the year. So that came to me, I say, how can that happen? Which means there's a red tape somewhere. That's why Satoshi came with the idea with the blockchain and cryptocurrency. Because now with that, if people understand peer-to-peer transaction, because if you go and buy this, when you bought the suit that you have on right now, how did you buy it? You went to the store, they told you, okay, it's $1,000. What did you do? You pull out your credit card, you give them the $1,000, and then they give you the suit. It's a peer-to-peer. It was done. Now, we also found out that every single transaction that the banks do, they all peer-to-peer. Now, how come they say that when you sign a note for them, they say that you create a debt? So me as a mortgage banker, knowing that when the bank receives the note, they actually endorse it, pay to the other off without recourse, which means they use it and create credit with it. So how can that be a debt? So now I saw what Satoshi meant when he came with that platform. Because he tried to let us know, hey, there's something going on in banks. They don't want us to know. But here's this platform. If you guys understand what I'm saying, on my white paper, you can see that all transactions are peer-to-peer.
Right.
So the banks receive their money the second that the borrower, quote unquote, signed that note.
Right.
The second that the borrower or the homeowner signed the truth in lending. Because myself, as a mortgage banker, I used to receive a haircut, they call it, at that time, on the truth in lending. Which means after I close all my transactions for that month, right, the company received a haircut, not to the loan officers. The loan officers didn't receive that because I wouldn't pay the loan officers on that money. That's money coming to the company based on volume. So which means we have two instruments. We have the truth in lending that's calculating how much the client's gonna pay if they were to pay the total amount in 30 years, and the note that the bank actually received. You see that? So when I saw all that, I said, hey, maybe we can do something about this. And I spoke with the developer, and the developer told me, yes, there's a way we probably can do it. You tell me how to do this. I said, well, the bank create, they monetize the instruments, which means they create paper, they create credit. I want to set it up in a way where we can create, we can tokenize the property, we can tokenize the asset, and we can do the same thing. He said, well, we can do it. After 3 months, he came up with the code that we can do that. I said, okay, that's it. Now we have to start working.
So we've created a platform, not reinventing the wheel completely. We are utilizing a traditional system that's currently the mortgage business, and we are literally tokenizing the existing business.
Exactly.
But on top of that, we're adding transparency.
Transparency?
And peer-to-peer.
Exactly.
Yeah,
because the key thing is, the bank said that they monetize the assets. We say we tokenize it, because they monetize it to the Federal Reserve System. We tokenize it through blockchain on the smart contract.
Right.
So we create tokens where we can actually sell those tokens to create liquidity and eliminate the debt. You see? Whereas the banks say they monetize the property or the assets and they create debt.
Right.
And in essence, in the back office, they create credit.
Yeah. Okay.
So they keep their credit, and the clients or the homeowner still making payments.
That's right.
And they are the one who create the instrument, because if they didn't sign it, it wouldn't be there, it wouldn't exist.
And who is the owner of that house?
That's the question.
Well, the bank is the owner of that house.
Banks,
aren't they?
because they have that foreclosure clause
Right.
on the deed that allow them to foreclose whenever they feel like it.
So this is also another advantage for which under one we call the members is to re-empower them.
Exactly.
So they actually are homeowners.
Exactly.
And I know we've set a time frame. Maybe we can talk about that. How long do you have to be a member, and what are the qualifications for somebody interested to get into our system of using our mortgage system and purchasing a home that they're interested in? Can you kind of take us down that road?
Okay, number one, we don't have a mortgage system. We have a funding system, right? Because when the clients come in, when they sign the instruments or the documents for us, right, they create the tokens. Because like we said, we do not reinvent the wheel. We use the same instruments that the banks use to monetize the property. We use the same way to tokenize it. But again, the only difference is everything is registered in blockchain with a smart contract. You see? So now the benefit to the clients, for example, number one, we do not have a foreclosure clause on our instruments, which means everything is settled as we know it from day one. Once they sign, it's settled. The only things that we have on the property is the client has to pay a membership fee. And they pay the membership fee for 5 years. And that's about it. Because once we tokenize the property, we create the liquidity, and then we eliminate the debt.
And is the membership fee equivalent to a percentage of what a typical monthly payment would be to a homeowner, or what would a monthly installment look like for a member?
Well, we use a payment factor. You see, I mean, it sounds or looks like a rate or interest rate, but it's not, because there's no mortgage payment, right? So all they're doing is, let's say you have a client who wants to purchase a house for $400,000, for example, right? And on a $400,000 property, the borrower, right, would pay roughly $125 to $2,700, depending on the credit and everything else, right? That's on the fiat system. Now, when it comes to us, they probably end up paying $1,500, $1,700 for 5 years. Whereas on the other side, they have a mortgage for 30 years. I mean, think about it. You are 30 years old right now, let's say, right? You have a 30-year mortgage, quote unquote, and when you're gonna stop or finish paying the house? You're gonna be 60 years old. You see that? Well, people don't think about that. But the bank actually, when they receive the instruments, they use those instruments. They create credit with it. They do bookkeeping entry, that's what they call it. And they create credit in their books. And so they can give more loans. That's what they do every single day. And we don't know it, because in school they taught us something different. We borrow, we have to pay back. But they never told us that the note that we sign for the bank, we are the only ones signing that note. The bank doesn't sign that note, which means we create something for them. You see, because the bank doesn't have the money. What they use a line of credit. It's the same thing we do. We have a line of credit with different investors that we use the line of credit to actually settle that account at escrow. Like in California, we use escrow, but on the East Coast, they use the title. The same thing, you see? So we use that line of credit to settle the account at title or escrow, and we pay the investors with cryptocurrency, because that's what we have. Now, by being in Binance, again, we were actually, I don't want to say push, by one of our investors, right, to go and apply and try to register with Binance. Why? Because they wanted to know how they're gonna get paid when we pay them in with our cryptocurrency. Yeah. Because they want to know how they're going to use it, how they're going to sell it, where they're going to go to sell it, if it's easy to do, if by giving them cryptocurrency as payments, because they get 30% of whatever they invested. Yeah. That's the promise that we do to them. Now, they get their funds or their coins roughly within 90 days after we close the transaction. They don't have, like in the mortgage-backed securities, they don't have to wait for 30 years. Since we don't have a foreclosure clause on our instruments, we're not going to tell them, okay, that was a bad deal. We had to foreclose on this transaction. And we don't have to tell them no lies. Right. You see, within 90 days after we register in blockchain, we can actually release the coins to them. Now they can go to Binance, they can put them for sale, and redeem their money. It's that simple. You asked a question earlier, you asked how we qualify the homeowner, yes. Right? It's pretty simple. The homeowner, they have to come up with 10% of that project in cryptocurrency. They have to come up with it, they have to have it in their wallet. That's it. Because by them signing those instruments to us or for us, and we can actually, they allow us to tokenize the property or the assets, we can create those tokens, and we can actually create liquidity and eliminate the debt. That's pretty much simple, yeah. Right? On our platform, because we already have the system that can do just that, right? So all they have to do, they have the 10% in their wallet. Once they have that, they approve. We don't need no credit. We don't need no income. We don't need no W-2s and pay stub banks. We don't need none of that. And the other plus that the members have is that they can start with a minimum amount. Let's say they can open their account with $500 or $1,000. And then they say, okay, my plan is to purchase a house in 6 months. They already programmed themselves that they can come in with that money within that time frame. As long as, or the second that they reach the goal of having that 10% in their wallet in cryptocurrency, we're ready to rock and roll with them. So it's that simple, you see? Because they qualify, by them coming and to sign those instruments for us, to create those instruments that we can actually tokenize. That's more than enough. And that's the same thing they do when they go to the bank. You see? They do the same thing and create liquidity for the bank. And the bank take the credit and give them a debt. You see? So that's why I love Satoshi. And that's why I even say that Satoshi was a banker, or is a banker, right? Because only a banker can come up with that idea. But it's just too sad to see that there's so many, like right now there's over 4,000 cryptocurrencies out there. But we are the only one that tokenize the property. We create liquidity and eliminate the debt.
Yeah, been involved in a lot of crypto projects, and
yes, sir.
Real estate crowdfunding projects out there, but nobody doing anything.
Nobody doing it, nope.
This project is much more centric, focused on the homeowners, the members, mm-hmm. Providing them a huge value-add benefit of joining the system. Mm-hmm. The investors mm-hmm. is a huge priority, mm-hmm. as I can see, getting them paid back their interest in a short amount of time.
Short amount of time, 90 days. Within 90 days, they get paid.
Yeah, that's unheard of. And in the crypto space.
Crypto space is beautiful because right now, and the good thing about it is after we finish with the project, after we fund the project, the client still has the cryptocurrency in their wallet. And they can go on and trade it, sell it, and do whatever they want to do.
So the 10%
still stays with the member. Because that's their wallet. Nobody can touch it.
Right. How do you see Funder One with current pandemic and everything going on? How important is Funder One capital?
Now, Funder One right now is playing a key role with the pandemic. Why? Even though the government is giving a lot of money right now to different to people and institutions to help out. But remember, the people or the companies or the mortgage company did not set up to give. They only set up to receive. Now, with the platform that we have to help the investors, number one, and then the people, because remember, the investors have to bring in the funding so we can fund those projects up front, and then later on for them to get paid their profit. So they are not number one, because they're key to what we do, you see? So we see the investors losing their shirt. When anything happens, they are the first to lose. We see that's nonsense. And then we see the people that help us to create the money, to create the paper, because without their signature, if they did not sign the note, if they did not sign the deed, if they did not sign the truth in lending, there would be no credit created. You see that? So we have the investors, we have the people, the end users. Now, when we look at those two key people, without those two, there's no business for the bank. And that's why the bank right now, a lot of them are giving the any type of company that doing cryptocurrency projects a hard time. Because they know once that cryptocurrency take off, they're gonna lose their shirts. Because people will get into us. That's why right now, if you were to go to the bank and say, hey, I'm dealing with this cryptocurrency, I want to wire this out, they're going to stop you. They will do every single thing in the book to stop you from investing, from coming to this type of platform. Because they know, right now, cryptocurrency is taking over. Now, one good thing that we saw within the last I don't want to say 30 days, because I think we've been in Binance roughly 30 days now. Yes. Within the last 30 days. Because when we jumped from, when we started a couple of years ago, it was at 25 cents. And remember, we had a lot of people that started buying UBETs at 25 cents. And some of them were buying, they bought 20,000, 25,000, 10,000, 15,000. Now, all those members are millionaires. You remember that's what happened also in 2017. Because Bitcoin started at what, 5 cents, 15 cents? But in 2017, in US alone, they reported 1.1 million millionaires in cryptocurrency. Only in United States. Now for us, right now, within the last 30 days, we have over 800 millionaires in our platform. Because some of them bought at 25, some of them bought at $1, and right now the value is over $200 per.
Very exciting time.
It is a very good time for us. Now, can you imagine when people come and say, hey, I have those assets up to over $1 million? You see? So after they finish with their project, they can actually go and take whatever they have in their wallet, they can go and sell it, they can go invest more, they can do anything they want to do with it. We're working with a group this particular group is working on a platform for us to introduce us to Sam's Club, Costco, BJ's, all the major bank stores. Why? Because we thinking about once we can partner, whoever we partner with, right? They're gonna give the clients a card, because Sam's Club, for example, has a card, and we can upload UBETs on that card. When after the person finishes his or her project, they can actually go to Sam's Club, buy furniture, buy food, buy everything for the house. That's where we're going. So now by doing this, that will help the people to use their UBETs or the coin to go out there and purchase anything that they want.
It's safe to say UBETs isn't stopping at real estate.
No. That's not our stop. We're not going to stop there.